Shakalaka, guys. Welcome today, guys. We're going to be talking about Bitcoin, how I trade, and where I think Bitcoin is going to go. Now, before I continue here, I want you guys to be very, very aware that we are not going to go up in a straight line. Now, many people believe that you can get rich overnight. This is not that type of asset class. The reason is because one of the things I made a mistake was early on when I started was I believed that you can get rich overnight, meaning that Bitcoin's going to, once you buy it, it's just going to go straight up. And it doesn't work that way. We've been lucky, very grateful that we have been blessed to see this breakout and a follow through with this movement from $47,000. It does not mean that if it goes down, that you should panic sell. There's this kind of phrase that we talk about in crypto called HODL. HODL means to hold on to your dear life, and Bitcoin is no different. In fact, I think we have topped out here in the short term time frames. Not to say that it can't go lower, but if you went all in and you bought Bitcoin here when I was talking about it here around 42,000 and change, you made a lot of money. Now the reality is we could go down here to 8%. To 47,000. That's within the realm of possibility. And what I want you to know is that as Bitcoin continues to go up and up and up, the risk of Bitcoin going down increases. So what you don't want to see is a parabolic move from these levels, because guess what? It's going to feel good, but it's not going to feel good when it goes down. And so what we want to do is we want to establish some sort of base here, okay? We want to have some sort of sideways action, a little down, a little up, a little down, so that it can resume back its uptrend. And what you want to see is Bitcoin holding this $50,000 area, give or take $2,000, not going to matter unless you absolutely need the money. But one of the things I always tell people is Bitcoin should not be traded. You should not be trading Bitcoin because Bitcoin does usually go up in the longer term time frames. Now let's talk about some short-term targets to get the people who are actively trading this. We blew out that 48,000 here earlier, and we're now heading into our second area of resistance. Resistance basically means that the area in which we had prior sell pressure. And this was back in, I want to say this was back in March of 2021 or December of 2021, actually, when we last hit that one. Believe it or not, that was actually a pretty good resistance area because a lot of people got trapped here. So we're expecting a lot of people to say, look, I bought it since 2021. I'm holding it for 3 years. It's not making me any money. I just want to get out of this thing because I already rode it all the way down to 16. So the thing is, when you're looking at these prices, you want to look at what's your next key area of resistance. And the way we have this right now is we are actually having another key area of resistance that's coming up real fast, which is going to be that 64,000. Now, generally, these areas of consolidation, okay, so these areas right here that you see are generally areas in which you do expect some sell pressure, because this is where a lot of people end up getting trapped in this market and then realize that, oh my God, maybe I should have sold. I shouldn't have panic bought here. And this is actually a lot of the FOMO people. So we are going to have a little bit more of a chop action as we enter in, because again, there's a lot of supply demand imbalances there. Now, the other area, and this is also coming in with this section here, this section is a very key area, and I suspect that we're going to have to, get some really meaningful demand here. But either way, we're at risk at the moment of coming down for quite a bit before we resume its uptrend. So I'm not necessarily saying that we're going to go down straight in a straight line, but I'm saying is every day as this entire trend gets worked up, the risk of us going lower, it becomes higher. And I want to actually emphasize that this rally that we saw here from the bottom at 39 was a very nice rally. I mean, in fact, that's a 30% rally. So for those of you who picked up Bitcoin at 38, congratulations. You were able to pick up some very cheap one. And I suspect there's going to be a little bit more opportunities here as we come back down to some, maybe perhaps the $48,000, $47,000 region. So this is what I'm targeting. Obviously, anything can happen. I'm not saying that it's going to completely collapse, but ideally we're kind of stuck in this range. And let me just kind of pretend like I'm predicting the price here, and then we kind of break off. That would be a perfect consolidation range. Our bear case would be this: we actually go back down and retest that 38,000 and then kind of consolidate and then come right back up. Our ultra bear case, meaning that our bull market trap, would be we break down completely and then we base out at 36. Either way, I think there is 3 scenarios, one of which I want, and that's going to be the one here at 34,000, because this one right here is going to be your last call before we end up going to the moon, right? This is really it, this $32,000 range that you have right here. And most people are probably not going to buy it at these levels, and I'll tell you why. A lot of people that probably buy at these levels are probably going to say to themselves, oh my God, I think Bitcoin can continue to go lower, and maybe 20K is actually our bottom, and they're going to pass on this. But in order for this to come back down, we need a lot of sell pressure. So no ETF demand. People are just shorting this thing left and right. There was some sort of big event that happened in the market, like the Fed decided to raise interest rates again, or maybe there's a war coming up, or perhaps maybe the money printer is not coming in as long as they thought it would be. So this would be a very bad situation. And the reason is because the narrative would have to be super negative for this to counter the ETF. Now, your other middle case here is actually within reason. I think this is the more likelihood that we kind of retest this bottom. But again, you can't really trade this thing, because most of the time when you try to anticipate these moves, most of the time you're going to miss it. So what you want to do is DCA your way in, and DCA means you're buying slowly on average so that you're able to take these parabolic runs. One other thing that people tend to forget, right? When you're getting to these levels, and especially when you're getting to 70,000, this is going to be the all-time high for Bitcoin. And I think that this all-time high is considered to be a very important number, because that 70,000 is where our last peak was. And if we blow that one up, it's off to the races. So again, ideally, I don't want a parabolic run tomorrow to 70. That's the worst scenario that you can get. And the reason is because if we go parabolic, let's just say tomorrow, and we go like this, then the fall is going to most likely be just as bad. Most people expect that when they buy it right here, it's just going to shoot up to 70. And if there's enough people that believe that, then we're going to get the parabolic run, but we would have exhausted all the buyers at that point. So I hope we don't get this, but again, I'm not going to try to guess how it's going to do it. I'm just going to play it by ear and hope that we are entering into a consolidation range. Now, the best time to have gone all in is right here. I mean, literally, whenever the market's down, that's when you really want to hit it hard. You don't want to hit it hard when the market's already moving about halfway into the move. And that's exactly where we're at right now. We're about halfway into this move. So it just really depends on your time horizon. If we go ahead and change the horizon to something else, so let's assume we change it to another session, then what you're going to find is you're going to see like let's just say you go to the week side. The week's a little different, because on the week side you could see that this is our second week. Let me close this cipher here just to show you guys. This is going to be our second week, okay, of gains. Technically 4 weeks straight, because this is not big in magnitude, but the last time we had about third weeks, we actually had a pullback. So if you take a look at this one right here, this is a little special case, because we had 1, 2, 3, 4, 5, 6, 7 weeks of up. If we are able to nab 7 weeks of up, we've already have the meat of this candle. So this right here, this early stage rally is this right here, which means we got another 1, 2, 3, 4, 5 more to go, or 7 weeks to go before we exhaust, right? So that's going to be on the weekly side. Most of the time, especially in these type of conditions, we tend to replicate this. So again, it just really depends on how the market wants to run it. But keep in mind that the market, once it starts to run, like for example here, 3 weeks straight, we may get a pullback. So 3 weeks is generally one more candle, and then we start seeing some chop action and then a pullback, right? Okay, well, hopefully you enjoy this video, and I hope you got something else from it. All right, CB out.